All right, let me expose you as a beginner to simple trading strategy for your day trading, scalping, or at least swing trade. Some of us who find it difficult to identify trend, so they enjoy trend line and all. So there are two indicators I will introduce to you. It's called trend line and right. So trend line, okay, and call it for me. So trend line for trend identification and momentum indicator. So which can use RSI or MACD. So, but as a beginner, I prefer you make use of MACD and exponential moving average. So you go to your indicator and search for EMA. So in this case, because you're going to use two, so you're going to type 10 in one, different moving averages, which is this one. So I add it up. The next I'm going to add is MACD, MACD. It will show you moving average, convergent, divergence. Okay, I'm seeing updated. Okay, so, all right. So these two are the major two uh instrument indicator you're going to add. If you look at Bitcoin now, see where Bitcoin crosses here. This is at $86,000. So somebody could ride up to that 127. So you see the confirmation. So trend line and even the moving average. This is the rejection, all right, for Bitcoin, for instance. Though it has been getting some signs, this on daily time frame, and you can see where the rejection occur. So all of this is still showing that, okay, it could bounce. You see this rejection. This is a confluence. That's about $108,000 was when more confirmation of a downtrend. Okay. Now, so you could see MACD, two things or more things MACD do for you. It help you to see momentum in the market, and at the same time, it help you to see momentum, and at the same time, it help you to identify divergence. There are other things, but so let's literate at this. So momentum and divergence. Now, if you like, you can use your MACD like this, or you change it to MT5 style. Now, so explaining the few features of MACD is that we have the signal line, we have the MACD line, and the histogram. Now, you have to work in consonant. So let the MACD line crosses, and then the momentum has dropped from negative to positive. So you want to find a trade, right? Now, but sometimes it may not actually happen as fast as possible. Then you want to align with your price target and your trend indicator. Now, this is something we must again learn. When the market is doing up and down, just normal pullback, but it's still above zero. So something here. So we can have the market come to and bounce from the zero level, probably for 4 hours. You could see it more, 1 hour, then. So you have to identify all of those things. Okay. Now I'm going to take a different instrument to check the analysis. So let's look at USD JPY. Taken from a different market. Okay. So this is an uptrend. So USD JPY is in an uptrend. Though it starts having what we call exhaustion. Because if you look at the MACD, returning back to zero. So it could bounce from zero, right? So look at the MACD cross. Now, once MACD had crossed, you may find a trade, but you are careful that the trade is not totally in your own side now. Then to change the MACD, you can change it to a different thing altogether. If it's the one you want, you can come this way, go to Style, remove histogram, and come down to MACD, go to the front of it, select columns. And then you can change this color to what you like. So I make it something, sorry. Yes. Now the MACD line, can remove it from that orange, put mine in blue. All right. So remove all of this stuff here. So now one of the things is that when you use it this way, you can see when a cross above zero, and as long as the MACD stay level-headed above zero, you are still in an uptrend. Now the next you want to customize is your 10-in-1 moving averages. So you go there. So you can see that the one that is already colored is red. Okay, which is good. You allow it to be. Now you need to add to other ones. Okay. So you go to input and then select EMA. Okay. All right. So select EMA, EMA. Okay, just two, because I'm just adding two. Okay. So this one I make it blue. Okay. I'll make this one. Yeah, so make it blue. Okay. And then type 50 moving average. The first one is 200 moving average, while this one is 50 moving average. So you can go to style. You see it there, right? So here we've done the needful that you want to trade. So are you going to be using daily? No? You probably will be working with 1 hour, 15 minutes, 5 minutes. So let's step down to 1 hour. So you can see that the market is at the exhaustion point. What do we mean by exhaustion? A point at which momentum is low. So if you're a swing trader, maybe you're using 1 hour, of course you understand price action. So when the market is below 200 moving average and 50 moving average, you want to be looking for sell. But how do you actually sell? Right. So to sell, or let me use a coin, because right. So this is how you sell. Once we're in a downtrend, so now you want to avoid certain trade like this. From here to here is choppy. You don't even know what the market is doing. So you have to be very careful. When the MACD line is cross over and again, and then the moving average 50 and 200 come back together, don't trade. Avoid such trade. Then when they keep a distance, so like this, so you can see the market, probably you have done your market structure shift down here. So you don't need to, I'm not saying you are waiting for this to happen before you take a trade. Just a moment. So what you are doing is very simple. The simple thing you are doing is this. Let's go. So now, so the market, right? You actually done your structure. Probably just like you have just need to know basic anyway. So you know basic of the market. So to look at this market now, it's very clean, right? And so ordinarily, so the MACD, if you let me expand my MACD here. So the MACD equally still show continuous downtrend. Look at when the market was crossing, but it's not when it crosses. You already know that the market is trying to change when it's trying to. I love to use when there's a good momentum and a change in direction. That's what is more confirmed, not the market that was struggling ordinarily, being flat. Okay, so here, now pay attention. Pay attention. How do I take trade with my moving averages, 50 and 200? Why not just one? Now, two things. The 50 show you the medium short term frame of momentum or direction, while the 200 confirm a longer period. So that is if the market is now below both 50 and 200, the downtrend can take a while and can give bigger move. Now, so how do we go about that? So if you actually won't take your trend line, for instance, and take from here, can you see something? We always say that at the top touch point or to your trend line, it always move more massive. Now, so this is what happens. When the market crosses below 50 moving average, you don't just enter a trade. You wait for the market to pull back to that 50. That's the sign of retest. Then you take a trade and put your stop loss above the previous swing point, and then 1:2 risk reward. You may not get trade every time. Now, so I haven't done this. You're taking a trade. When you come, market is somewhere here. Wait for it to reverse back to 50. All right, reverse back to 50, or sometime extreme one to 200. So when it reverse back to 50, let's say you're already here, but of course you want to see the price action, maybe swing point, whatever, and then you are taking a trade and put your stop loss. Now, in the case of this, some may not have to trade, some that have a problem. So what you're doing is you're studying to look at the market. So chances here is this, look at it. The market did not close below the 50 moving average. So rather, what did the market do? So if you understand the price action, market structure, you will have done the basic things first by yourself, being able to identify the higher high and a low, and then the market move up. So, but you're a bit conscious because now the market broke through and closed above this. So that means we are going to be for opportunity anytime soon. So if you look at it, an alignment, you're going to almost find, so when it close and then a sign for buy. So now the moment when you cross above the 50 and 200 together, that's a very bullish sentiment. So you allow the market to run your desired, take profit. Okay. So then, as the market continues to go, anytime you see that the distance between the 50 and 200 is getting wider, understand that there's going to be a pullback, a more bigger pullback, not the usual structural pullback. So you want to be waiting for the market to come and retest 50 or 200. So retesting this 50 or 200. Okay. So you want to now take a trade. So retesting here, close above. This will have been a trade for you. Stop loss here. I mean, you lost. Okay. So now the market, and I said once the market, the moving average of 50 and 200 align too much together, be careful. So don't take trade. So then we have the market broke out downward. And what exactly am I supposed to be waiting for? So you wait for the market to retest it. So retest both. So you retest both the 50 and 200 and you are selling. 1:2 risk reward as the first target. The others can be trail. Others can be trail. Okay. So if your order is being trailed, you are going to enjoy the trade for a while. So when you see market this way, I say clumsy, except you're already on a short position, so you just allow it to run. But anything, choppy, this one choppy, avoid trade. Okay. So using 50 moving average is very powerful. 50 and 200 moving average are very powerful for you to spot good profits, irrespective of this instrument, synthetic, forex, crypto. Okay. So let's go to a lower time frame. Okay, so let's go to a lower time frame, perhaps 30 minutes, 15 minutes, 5 minutes. So you still find the same thing. You just need to know what you are doing per time. Now listen, even if it's one trade you get per period or day, take it and leave it. Okay, until you find another setting again. All right. So 50, so now listen, when the market is not trending, be careful because the trend line will not give you accurate estimation. All right. So that is what it is for trading with moving averages and MACD. So I told you divergence of MACD. MACD is showing higher, one is lower. It's a what we call divergence. Okay, so divergence. At least MACD is already telling we are selling. The price is no. Oh, okay. So let's look at now. Another unique thing is that the more you see this your MACD, this column is increasing more. Don't panic. Okay. Let's see which one. BTC. Okay. You can see BTC now. It's still going to sell. All right. So it's very, very simple to use. Um, XAU. Okay. XAU USD. All right. So look at XAU USD. So the same thing. So it's either when the market come back to 50 and hold, so you price action from there, or you come to or you come to 50 or come to 200. So using MACD is going to help you, but always look at the volume. When there are no much volume, know that the market is going to struggle. So you may want to avoid such trade. So that's what it is for you to maximize a simple trading strategy without stress. So if you find one beautiful trade, so let's see when the market return here. You see it. You do this way, like this one or this one. Okay. So imagine when you find a trade here, so your stop loss is gonna be little bit below swing or 17 pips. The same thing if you go that round. Now, if it comes to 50, your stop loss will be below 200. So that's how you trade this strategy. It's very simple and less stress. So do have a nice time.